to extend it beyond the 30th of June 2025. Now, the Uganda Agriculture Insurance Scheme is being implemented through the different entities, like for example, through banks, where now they are giving credit and loans to farmers, number one, through direct farmer interface, or even under the banks, we can even talk about the microfinance institutions, because now the banks, that's tier 1, then you have tier 2, tier 3. All those are eligible to provide agriculture insurance, okay? Because what's happening is when you are financing, giving farmers money, you can insure the loans that you are giving to the farmers. And I would like to encourage all of us here who are in MFIs, if all the top banks providing agriculture financing are insuring their loans, and some of you are actually borrowing money from them, and they are insuring the loan they are giving you, then I think you need to think twice about also why aren't you insuring the loans that you are giving to the farmers. Then you have direct farmer interface, where we now go and meet farmers in their different farm organizations, let's say the district farmers associations, and those we are trying to approach them through the apex bodies like Uganda National Farmers Federation, Uganda Cooperative Alliance, that is now for cooperatives, area cooperative enterprises, SACCOs. All those are channels being used to reach farmers and be able to deliver, getting the product to the farmers. When that scheme began in Uganda, that was July 2016, we were only 3 people who were handling it in the whole country. And it's supposed to be a nationwide product. Now, we needed the structures of the different farm organizations to be able to deliver on that. Now, as we speak right now, we have 27, 30 staff, but supposed to be handling the whole country. So you see, we need your different organizations, development agencies to work with to be able to reach the farmers you're working with directly. And it is only if you express interest that will be able to reach your farmers you're working with or you're financing. The premium subsidy and farmer categorization, when the scheme began, the government of Uganda was putting aside every financial year. And if you're always keen to listen to the budget, they have always read 5 billion shillings is available every year. When we began, the 5 billion was a lot of money. And the arrangement was, if a farmer was to ask for, is to be asked to pay, let's say 50,000 shillings as premium, the government was willing to pay part of that premium, and that is what we are calling the subsidy. Now, in the non-high-risk places, like for example, Mbarara, the subsidy was supposed to be 50%. So if the insurer is asking the farmer, I want you to pay me 50,000 shillings for insurance, what would happen is the government, the farmer needed to pay their 50%, which is 25,000 shillings. And at the time the scheme began, there was an element of VAT, which was 18%. There was an element of training levy, 0.5%. And then there was stamp duty, which was 35,000 shillings for the farmer to be able to do what? To get insurance. But thank God for the government of Uganda and the goodwill they had towards the scheme. They waived VAT in 2018. They waived stamp duty. That was in 2021. In the financial year 2021-2022, VAT was, stamp duty was also waived. And now you are only left with purely the premium alone and the 0.5% training levy. Now, I was giving an example. If the farmer was to pay 50,000 shillings, the insurer is expecting 50,000 shillings, the farmer would only be expected to pay 50% of that, which would be 25,000 shillings. And now once they pay their 25,000 shillings, then would tell the government of Uganda, through the Insurance Regulatory Authority, the farmer has paid their 50%. Can you now give the other 50%. And at that point now, the insurer would receive the 50,000 shillings. But should the farmer suffer loss before we have received the money from the government, we as insurers would still go ahead and compensate the farmer for their loss and would continue demanding the money from the government. So the farmer did not have to worry about that money coming in. So that 5 billion, as I said initially, it was too much. And the scare we're facing at that time is you guys are not utilizing this money. Can we allocate it elsewhere? Can we take it away? For the first 2-3 years, that was the challenge. But when it gained momentum, we got to a point where the 5 billion was no longer enough. And effective, I think, 2021, 2022, 2022 to 2023, we needed 15 billion as premium subsidy, and we've been asking the government to increase it to that, and there have been indications that eventually they might do that. But otherwise, there was a survey commissioned by IRA, the Insurance Regulatory Authority, sometime towards the end of last year, and financed by Feed the Future, also came back with the same feedback of there's need for the government to increase the premium subsidy. Under that scheme, we've categorized the farmers into 2 categories. The small-scale farmers, those are farmers who are earning less than 20 million shillings income per season. Much as we may talk about 5 acres, but you may find somebody operating on half an acre and has greenhouses there and is raking in millions. So we cannot call such a person a small-scale farmer. So I would rather we focus on the income. If you are getting a seasonal income of less than 20 million shillings a season, then under the scheme you are categorized as a small-scale farmer. And for those people who are doing financing, if you are giving loans of less than 20 million shillings, then those farmers are small-scale farmers. Then you have the large-scale farmers. Those are people with a seasonal income of more than 20 million. And as long as you get more than 20 million shillings in a season, then we categorize you as a large-scale farmer under the scheme. The specific objectives as to why the scheme was started, this was to ensure Ugandan farmers is largely protected against the effects of agriculture production risks by introducing measures which secure and ensure indemnity sufficient to keep the farmer in business. Now this is basically the gist of the issue here. When it comes to agriculture insurance in Uganda, we are only insuring farmers against production risks. The moment you are past the production stage and you have moved the things you're harvesting to storage, or you are in transit moving from Barara to Kampala and you lose the product on the way, you are not on cover. Okay? You need to have special arrangement. There are some products where we can give you what we call an extension. For instance, that when you have harvested and you have to travel and take the things to, the produce to town, you might request for an extension, then we can give that under special consideration. There was a farmer who had borrowed money some time back, and he was into cattle fattening, and after he had fattened his cattle, loaded them on the truck and was driving to the market. Then some kilometers away from the farm, I think there was a low sagging electrical wire, and which touched the truck, and all the cows that were on the truck died. So this farmer ended up suffering loss at that point. But at the point of production, he was on cover, but now they were now transporting them to the market, and unfortunately wasn't on cover at that point. The reason as to why this scheme was started was to increase access of farmers to credit by protecting financial institutions, agriculture loans they disburse from the effects of agriculture risks. Back in my days as a banker, I remember when a farmer would come and they wanted to get a loan, what would happen would not give you a loan on the strength of the agriculture, because we looked at agriculture as being very risky. We would appraise you on the strength of the other line of business or something else you are doing. And then just because I have a target and I must do what, I know the story, you are going into agriculture, but my paperwork is entirely on another business altogether. And that's where at times now we end up again structuring these loans badly. A person going to agricultural production, they're expecting an income 3-4 months from now. If they're in cattle fattening, you're looking about 6-7 months from now. If they're into fish farming, you are looking at 7-9 months from the time you disburse the loan. Now, you have done your appraisal on strength of a shop, strength of a what? So it goes without saying there must be monthly repayments. And some of them, you will now give them the money, assuming his need was actually 100 million. But because they have installments, which they are supposed to be doing in the meantime, that means they can only use probably 40 million. They will leave the other portion on the account to be able to do what? Meet these installments until the time when they're going to production. And that's where now many times things go wrong. They do not put in enough. They have not stocked well. They have not been able to buy the feeds because the installments need to be paid. So with this, our prayer and our desire was to have protecting these loans from risks. And today as we speak, financing towards agriculture has increased. And soon after COVID, some of the financial institutions approached us and said, guys, we need your help now. We are putting emphasis on agriculture now because this other line of business also has its own issues. I mean, the trade and the rest, we want to focus on agriculture. And so we believe to a good extent we've been able to achieve this second goal of releasing credit towards agriculture. Under the scheme, that's where we started from. Crops and livestock, which were covered under the scheme, we had that entire list. And then when it came to things like fruits or fruit trees, it was you are looking at pineapples, passion fruits, mangoes, you name it. As long as it's a fruit, edible fruit, then you could also benefit from the scheme. And then also if vegetables that ranged from, because we try to make sure we captured everything. Tomatoes, onions, if there's any agri here, don't say that now tomatoes are not vegetables. But it was just for purposes of bundling up and making sure at least everyone is able to benefit from that. When it came to oil seeds, simsim, groundnut, soybean, as long as we are able to produce oil out of it, they would be eligible to getting benefiting from the scheme where they would be able to get premium subsidy when they would get insurance. Livestock, cattle, both dairy and beef cattle, whether they are local, crosses or hybrid, all those could be insured, piggery, poultry, goats and sheep. And then when it came to fish farming, both onshore and offshore. I hope we know the difference, because when you talk of onshore, those are what? You are talking about people with their ponds. On land, you have your ponds all over the place. Those you can insure. You have the hatchery. You could insure the fish there. And then offshore, these are people with cages in the lake. Or, of course, in Uganda, we can't talk about oceans. So the offshore farmers also could benefit from the scheme. Benefits of de-risking agriculture insurance, agriculture finance. Of course, the farmers increased access to agriculture credit. I've already mentioned that. There was increased investment in agriculture because now some people with the comfort of having insurance, they were able now to invest more into agriculture, because initially you'd come with a bit of fear, you put in some little money and you see how it works out. And then of course, borrowers' credit rating was maintained because we have the CRB, where if you borrowed money and the longer you took to pay your installments, so you went into arrears, then your credit rating would do what? Would keep getting bad and worsening. And at some point, no one will want to touch you. It becomes like a scar. Every time you they put in your card, say there was this loan which took 180 days. What happened? You would have to begin to explain. And at times, with the banking, there is an element of intuition. Because the moment I see this, unfortunately, we are not very good with our financials. So many times the lending is more on intuition. You come, I trust you, I think this guy is solid enough, I will be able to pay this money, I lend you the money. But if from the word go, I'm not very comfortable from my intuition, however good your financials are, I will look for a technical risk. There will always be one. And I'll give that, and your loan is declined. And these are realities. Because I know how we've done it, and I know it's still going on. Much as I've been away from financing, banking for some time, but I know these are realities and this happen. So the credit rating of the farmer, as long as they have suffered loss, insurance comes in, compensates, then the farmer is as good as new. He can actually borrow again and be able to do what? Continue with whatever they are doing. Of course, through agriculture insurance, of course, there's financial literacy because there's need to create awareness and sensitization. So that's where now we end up having to involve whatever training is there to create awareness. And then affordability of scaling up production to commercial levels from through local financing. So of course, as people, like now when they invest more, then they're able to be eligible to borrow more from financial institutions. Then farmer considerations to seek financing for adding on-farm value added product enterprises, because now you are producing a lot, there's now need for you to put value addition, because you don't want to go into the market when everyone is in the market. Chances are you are going to fetch a lower price, and then at the end of the day you might begin thinking about value addition. So that way, because of the increased production and financing, of course now things like value addition are considered. For MFIs, how does agriculture insurance help? It reduces on the farmer default on loan repayment, because if you are there, you are dealing with a farmer, they have suffered loss, there's been a drought, there's no question about it, and they have to pay back money because the money probably you lent them was money you borrowed from elsewhere, or it is other farmers' deposits or savings, or your investors' deposits, funds. Of course, you need to protect those. Now, when you have lower farmer default, it is an advantage to you. Then it enables MFIs to lend again to a farmer even after they have suffered a very bad loss and they are unable to pay back. When insurance comes in and pays that loan, then at least you are able to still lend to the same farmer. It improves on the risk profiling of agriculture loans, because when the loans, loans have gone bad, farmer does not have money to pay you. When insurance comes in and compensates, then of course the loan is settled or it's reduced, so it does not go into the non-performing area and things like that. So the profiling of some of those loans where you don't end up having NPA is 20% and things like that, because it's even a target at times for some people to make sure your NPAs do not go beyond a certain point. And then you have, in case of natural disasters, the resulting compensation enables recovery without pursuing the borrower. Because in this case, you know what has happened, you have seen the farm, then definitely you go follow up with insurance. If it is the cause of loss was an insurable risk, then that way the loan is paid back. And then, of course, loan compensations can act as a pool for some institutions where they actually, like now, when the compensations come in, they use those as a pool to be able to settle some loans which are going bad. So that way, NPA or the loan book does not look as bad as it could have been, assuming there was no some at least compensations coming in from agriculture insurance. Expectations pursued in with the risk and agriculture finance. These are some of the things we are looking at. We expect when the scheme began, reduction of lending rates as insurance further reduces the risk. Because what happens is when you are financing, you normally have probably a base rate you work on, the cost of your funding or the cost of your finance. Then now you add the profiling of the venture or the business you are lending. If the individual is a risky person, there's a certain percentage you add. If it is somebody is in agriculture, there's a certain percentage of risk you add. And you end up now, if we can have loans performing well towards agriculture, then the premium rates can be brought down because it's not as risky anymore as we initially thought, or it was, because of the aspect of agriculture insurance coming in. Then future consideration of insurance as collateral for agriculture lending. We are looking at this also probably for farmers who do not have collateral. They could also use that, since I have agriculture insurance and your fear is I'll not be able to pay, then this can also act as collateral. So of course there is the other element of flight where the farmer may decide to run away. Then now of course the financial institutions have got to come up with how to mitigate that risk. And at times there you look at options like group lending, where the farmers know each other and don't expect one to disappear. So we're looking at agriculture insurance as acting as collateral, and then also agriculture financing becomes the product of choice by financial institutions, which is what now we are achieving, because now as long as, like I said, all the financial institutions that are big on agriculture financing are all insuring their loans. That one, even together with the MDIs, all the big ones are all insuring the loans they are giving towards agriculture. Then SACCOs, cooperatives, and SCAs prioritize insuring the agriculture loans, just like the Tier 1 and Tier 2 financial institutions. That is what now, that was the motivation and spirit behind my being here today. Because I know we are dealing with at least MFIs, and we want you to also follow the example of the Tier 1 institutions. Then increased reduction in non-performing assets due to loss as a result of climate change effect. So of course we want at least to be able to manage that and decrease the losses due to the effects of climate change. What products are we offering? Broadly speaking, I would say we have the multi-peril insurance. Multi-peril simply means multiple risk insurance. We are insuring a number of risks. For example, when we are looking at multi-peril crop insurance as block 1, part of block 1, we are insuring up to about 9 risks for farmers involved in crop production. And when you look at livestock insurance, we are talking about causes of death, mortality of the animal. This cow could die, for example, in the case of assuming there's lightning on the farm, snake bites, disease outbreak. For those in piggery, assuming there's a swine fever breakout, that's a risk. We do what? We do insure. People in poultry insurance, we are still looking at mortality. When the chicken die, we do insure risks like Newcastle, Gomboro, all those diseases, we do insure them. The only exclusion we have, a major one, is avian flu. That is the bird flu. That's the only risk we do not insure. But otherwise, most of the causes of diseases that cause death of birds, we do insure as long as you vaccinate your birds in time. Then the risk is also insured. Aquaculture, that is fish farming, we do insure against mortality. The fish could be poisoned. There could be change in air currents. At times, I understand pressure or whatever it is, or pollution of the water. All those could result in loss of fish. We do insure against those risks. And then tree or plantation insurance. Normally, these are mainly their greatest fear, like now in the sugar canes, is fire. So that would be insured. We do insure those risks, and those are several risks that could be there. And then the named peril is where a client comes and specifically asks for a cover of a particular risk. I want to be insured against fire. My biggest problem is diseases. Can you insure me that? You specifically name the risk and would provide the cover. Then you have the index-based insurance, which is the second broad category. And the index-based insurance here, we base on an index to determine the extent of loss a farmer has suffered, and then we compensate them to the extent of loss. So one of the index products we have is the weather-based index insurance, where we use satellite to monitor the happenings of around or the environment or the area of operation of the farmer and see to what extent has it affected crop production. And from that, would be able to compensate farmers. Then the other one is the area yield index insurance. That one, I will also, these two I will explain in detail. We base on an area where a farmer is expecting a certain harvest or yield, and from that, we are able to compensate them if there's been a deviation from the expected harvest. I have a few minutes, so I think I'll try to be a little bit faster. So I think I'll go into the weather index insurance, which I just mentioned earlier on here, among the index-based insurance. Why am I focusing on those? I'm looking at, from the point of view, the MFIs. You are dealing mainly with small-scale farmers, and there are products which are most suitable for the small-scale farmers. And the products which are most suitable for the small-scale farmers are the index-based products. Okay? And I'll give the reason why I'm saying they are the best option. I'll give an example of the multi-peril crop insurance. Multi-peril crop insurance requires me to do a minimum of 3 inspections of the farmer. I think I need help with this. Okay. Under the multi-peril crop insurance, which is number 1 up there, for me, for an insurer to be able to insure a farmer, number 1, they've got to do 3 inspections of the garden. And inspection number 1 is to determine if the farmer says, I have 10 acres of land, I'm going to plant maize. You've got to confirm they have actually planted the 10 acres. We had an instance where a farmer claimed that I'm going to plant 500 acres, and they only planted 263 acres. So we need to be able to go and confirm that you have planted what you have said you are going to plant, first of all the crop, and then on top of that, when you tell us you are going to get a yield of 2 metric tons per acre, will you be able to achieve that? Because the spacing is very important. If you have not followed the right spacing, you will not be able to achieve it. Irrespective of whether the seed producer said you can get 5 metric tons, if you have used the wrong spacing, you will not be able to get it. So we send an agronomist who will come and verify and confirm that you will be able to achieve the yield you are saying you will be able to get. Then number 3, do you already have a pre-existing condition on the garden? Because some farmers are very smart. They already know they have a problem, and when they come, they get insurance. When there's already a drought and say people, can you come and get insurance? You will calculate, I'm paying 50,000 to insure 1 million. He will pay the 50,000 there and then, because he knows things are already bad in the garden. So we need to confirm that you don't have already an incidence of, let's say, pests or diseases. And if they are there, you will be advised and guided, you need to manage this. You need to do this, and there will be all this laid out for you to be able to know what you need to do. And then after that, we determine now from that information how much yield you'll be able to get. And then we are able to determine how much we are going to insure. We would rather disagree at that point than when you have suffered loss and then we begin going back by the spacing. But then what? You see, they were not applying fertilizer. You are not doing what? No, we would rather agree from the word go that you will not be able to achieve the yield you are saying you are going to get, and we don't want to go down this lane. If you have paid your premium, you either agree on the value we are proposing for insurance, or we give you back your money and we part ways. So if we have agreed, then we would be able now to insure you for the value that has been determined, that has been established by an agronomist, because it's not me who goes there to do that assessment. You have your idea, what you think you want to propose for insurance. You know your business better than I do. I bring in an agronomist who also knows crops to determine. He has no interest on whether you insure high or low. For them, they have their fee, and that's what we'll pay. So they'll be able, when you agree, then we'll be able to agree on that value to be insured. So inspection number one. Then inspection number two is we come in to make sure the recommendations you are given from the first inspection, you are adhering to them. If you said I'll be spraying every 3 weeks, I'll be you are told you should apply fertilizer because this crop already is saying it's nutrient deficient. Have you done it? So all that check comes in to make sure you are still complying. Then we have what we call the pre-harvest inspection. That is before you harvest. Are we still on track? All things are already going to be going bad. Then there, that helps us as also insurers to be able to make provision for the money to compensate you should you eventually suffer loss at the end of the season. So that is those inspections. The agronomists we send, the minimum charge they ask for just to write the report is 300,000 shillings. And that is for a small farm. The moment the farm goes into 100 hectares, 200, 300, they begin talking about a percentage. The amount does what? Goes up. Now, if the farmer is in Mbarara and I send an agronomist from Kampala, then there's the transport. So you find that just paying the person is going to come and verify for one inspection, I'm going to 1 million shillings. And if there are going to be 3 inspections, that's already 3 million shillings. And then if I have an ordinary farmer, or Ebo Sako lends somebody 10 million, how much are they going to pay for premium? Because this cost of these inspections has got to be passed on to somebody. Are we together? So you find that multi-peril crop insurance is not a practical solution for a small-scale farmer, but rather for a large-scale farmer. And that's where now we come in with the weather index insurance, where we use satellite to monitor. And now what happens is when it comes to weather index insurance, we are not looking at crop loss in the garden, okay? Where we come and weigh and measure how many kilos did you harvest and then what you think was the cause of loss. But in this case, we are insuring against the cause of loss. This is the section. When we are looking at multi-peril, we are looking at measuring the actual loss in the field. But with the weather index insurance, we are looking at monitoring the causes of loss. So if we do not have enough rainfall, the temperature is high, there's been a high humidity, those are the factors you are monitoring and looking out for. If they are not optimum for plant growth and development, then you are able to determine if these things have been happening over a period of time, for how long and to what extent did it result in loss. Okay? For example, you go into a maize garden and it is shining that day. You'll find the leaves are already doing what? They are folding. What does that mean? This satellite is monitoring for escape of water from the leaf surface. Now, if the leaf has folded, that means you're not having that escape, which means production is not going on. And if this goes on for 3-4 days, that means there is an extent to which productivity is being affected, and it is added up cumulatively up to the end of the season to be able to determine the extent of loss the farmer may have resulted as a result of these small instances that have been happening throughout the season. These are some of the satellite images. I think you know what happens around the sections you are seeing where it is red, black there. Sorry, the red. Let's focus on the red. We have deserts in those places. That is showing you what is happening on the surface on the ground. Where you see green, that means there's a bit of moisture and things like that. So these are images which are taken every 15 minutes. And this is looked at throughout the entire season to be able to determine what has happened in the garden. How does it work? This monitors for crop water availability to determine drought and has a linear correlation to the crop yield. As long as water is not enough in the soil, that means it's not available for the plant. And this water, we are able to know it was available to the plant if we see it escaping from the leaf. From our science back in school, we would only have release of water and oxygen from, water from the leaf surface and oxygen when carbon dioxide has gone in, food has been produced, and then you have water escaping on the surface. So the index is selected to represent as closely as possible the crop yield loss likely to be experienced by the farmer. And drought, in our case, we are not looking at how long has it shined. Is it 2 weeks, 3 weeks? No. Because it may rain once, but the soil holds the water for some time, and that water is available to these crops. So Majas is not raining, but the plants are having water and productivity is going on. So that is what we are looking for. So in agriculture insurance, we are looking at the required crop water utilization is not attained due to deficit, rainfall deficit in action with other weather conditions. So when that water is not available to the plants, because at times the water can rain heavily. It can rain heavily. If that water goes below the roots of the plant, that means that water is not even available. So if you are standing somewhere with your rain gauge measuring, and the water is below the root surfaces, the root depth, the plant can't use that water. Or it has rained today, rain gauge has measured, all the water has been lost in runoff, that water is not available to the plant. So all that will be captured, and you'll be note that there's no water going through the plants. And then excessive rainfall is when you have a lot of this going on, a lot of rainfall, and to an extent that it results in crop loss. For instance, beans, when it has rained heavily, a point reaches, they just become yellow. You have rain, but even open the pods, you just have water. So that is what we determine as excessive rainfall, not the hailstorms and heavy, no. It's this continuous rainfall which eventually results in loss. So we do monitor for those, and these are the two major risks we cover under weather index insurance. We cover farmers against drought and excessive rainfall. And experience has shown us from the claims we have paid so far, 72%, 78% of the claims we have paid have been due to drought. The other risks, diseases and pests, farmers can try and manage. But there's no way you're going to begin ferrying water to pour into the garden when you don't even have water at home. And even there are times when you talk, I know people promote irrigation systems and things like that. I don't know how many small-scale farmers can afford. But even many times our sources of water, once it becomes too dry, that water is also not there and available for the farmer. Why do we promote weather index insurance for small-scale farmers? We promote it because the conventional insurance is difficult to work for small-scale farmers. You had the cost element I calculated for you. It becomes untenable or unpractical for a small-scale farmer. Insurance index avoids problems that make individual insurance unprofitable for small and large number of farmers. You have, let's say, Ebo Sacco, they have lent about 100 million to probably 100 farmers. Now, these people are scattered all over the place. Now, you find that now with this, we are able to provide them with cover without necessarily incurring costs of visiting each one of them. But we have satellite data that is doing all the monitoring. Whether you're in insurance or not, this information is available, and we're able to do what? To assess you and determine that. No transactional costs of measuring individual losses, and then there's no moral hazard, as no single individual farmer can influence the index. Reasons being, if one farmer has not taken good care of his garden, it's not going to affect the outcome of other farmers in that neighborhood. As long as this guy, even if he doesn't do his job, it's part of our basis risk, or what we call, you might not, there are farmers who will even get insurance and don't even plant. You get it. And when they suffer loss, as long as we have an average for a sub-county, we compensate everyone in that sub-county, irrespective of whether you planted or you didn't, or you took good care of your garden or you didn't, because the prevailing weather conditions that sub-county were good enough for your crop you planted we will compensate. If they are not good enough, then we'll compensate. Then adverse selection does not matter, as payouts do not depend on the riskiness of those who buy insurance. Now the riskiness is now the cases I'm talking about, where somebody has not taken good care of his garden, has not done what, but as long as on average in the sub-county there wasn't enough water or rainfall to support crop growth and development, then what would be, no farmer can, we do not have that adverse selection, where somebody comes when he knows 100% chances he will suffer loss. We don't have that when it comes to adverse selection or when we are using weather index insurance. What is covered? I already mentioned this. We cover drought and excessive rainfall for this product. It does not cover losses related to pests, diseases, floods, landslides, localized storms, hailstorms, windstorms. We do not cover those risks, because all those risks, what happens is they require on-ground assessment. You've got to send somebody to come and verify that. And that comes at a cost. So that's why we try to avoid those. But if in a particular area, let's say Chiruhura, you tell us that you have farmers who are there and there are many, you would like us to give you an extension for hailstorm. We can provide that extension on special consideration, because if the incidence is happening a lot, then it is something. Now if there are a number of farmers, then it's something we can provide. But otherwise, we do cover the two risks up there. And then the levels at which we can insure farmers. Financial institutions, normally you want to focus on number 3, the loan amount you have given to the farmer. And we are saying it is not fair on the farmer. For you to get the loan paid, you are compensated, you are home and dry, and the farmer who had planned on, let's say, even buying a motorcycle, a bicycle at the end of the season, has suffered loss, but the loan is paid off and then they are not able to achieve their dream. We are saying let that farmer insure the expected yield. And when they insure the expected yield, that means we are looking at the acres on the area they have planted over the average expected number of bags probably they get every season, and then the price at which they are planning on selling that crop. That is the yield they are looking at. We tell them, you ensure that when they suffer loss, then we'll compensate them at that level, and that means the loan can be paid, and they're able also to retain something. When you are looking at input costs, that means also this is maybe less, because for instance, if one is expecting a yield of 1 million shillings, normally the input costs are between 60 to 70%, which would be probably 700,000. That means we can ensure the 700,000 they expect, they are going to put in, and when they suffer loss, that means they'll be able to get back the money they put in, and if the loan was part of that money, they're able to pay off the loan. But if for a person expecting 1 million shillings, probably the maximum they can borrow is 300,000, 200,000 to help them meet the input costs, and they are able to get that yield. So we encourage even the MFIs, tell your farmers to ensure the expected yield. For us, what we want is the declaration you give us. How much are you insuring? And when the farmer suffers loss, that's the extent to which we will compensate. If you have insured only 200,000 for the loan, the maximum we'll give you is 200,000. If the expected yield was 600, and you insure, input cost is 600, and that's what you insure, that's the maximum.
What would be the expected effects if you insure the expected yield? What would be the effect on the premium? Like, for example, the average premium is now, let's say, 30,000. What is it going to be if you expect, if they need to insure the expected yield?
Okay. Yeah, I think just for purposes of calculations, I will not use a complicated calculation, because for ordinary small-scale farmers, the premium rate we agreed with government was 5.5% in non-high-risk areas. So just to bring the example home, is if a farmer is expected, I think there's a nice calculation here. Okay, we have an example here. This farmer is working on 1 acre. He's expecting to harvest 20 bags from that 1 acre, and then we want to agree on how many kilos each bag weighs, and each bag is weighing 100 kilos, Because some places will tell you a bag is 70, others want 430, so 100 kilos. And this farmer is going to sell every kilo at 1,000 shillings. So which means this farmer is expecting a yield of 2 million. Now this 5.5%, which 5.5 over 100 over times 2 million, this farmer is expected to pay a premium of 110,000. Now, the government is saying it will pay 50% of that. So the farmer will be having subsidy of 55,000, which means the net basic premium they will be paying is 55,000. But the 0.5% training levy I spoke about, which is 0.5% of the 110, not the 2 million. The training levy is charged on the premium. 0.5% of 110 is 550. So you find that this farmer pays 55,500 shillings. Okay? Yes, to ensure this 2 million, because we'll go to the government and ask for this 55,000. Now, to remove any confusion from our calculation, the premium, I now want to answer your question. The premium this farmer is paying is 110,000. Are we together? Now, if you insure a yield of 2 million, now using calculator, somebody just have calculators nearby. Now, if we are saying 70% of the input costs, of the yield is what are going to be input costs. Let's get 70% of 2 million. What is that? 1.4 million. Now, 5.5% of 1.4 million is what? Pardon? 77,000. Okay? So, scenario number 1, you insure the expected yield of 2 million shillings, you will be expected to pay 110,000. But if you insure the 1.4 million, which is your input costs, you will be paying 77,000. So, the lower the value you insure, the lower the premium, but that means you are self-insuring yourself. Whatever happens, should the things go wrong, I'm on my own. That is what you are saying. So if you decide to insure 1.4 million, all you are saying is the 600,000, I'm insuring myself. So when you suffer loss, the maximum compensation will give you is the 1.4 million. And so, yes, it may be cheaper, but at the end of the day, it's going to cost you more should you suffer loss. Now, the other product, which I think I'll just run through quickly, is the area yield index insurance. Under the area yield index insurance, what happens here? An index, okay. I'll just go straight to the next slide so as not to waste. What happens, how it works? We divide the entire country into unit areas of insurance, okay? And now those unit areas of insurance is supposed to be more of microclimates, but we'll take it to be a sub-county, and we determine, let's say from the production officers or the agronomists, what yield on average the farmers in that sub-county get. Now, if we have established that the expected yield in this sub-county is supposed to be 1 metric ton per acre for farmers, that is what now we will say under normal circumstances the farmers in, let's say, Rubicon get 1 metric ton. Now that will form now our what? Historical yield data, and that's, against that now we will insure the farmers. At the end of this, towards the end of the season, what happens is, okay, at the beginning of the season, we select some farmers within that area, because we are not going to visit every farmer. Assuming there are 1,000 farmers, we may sample out 100 of them. And from those 100, we will mark out blocks in their gardens, and we will harvest with them. We will mark out, let's say, 2 by 2 acres, meters, and we'll expect the farmer to manage that plot, that block, the same way they are managing the entire garden. Then at the end of the season, it's time to harvest. we will send people to do what we call crop cuts. And during the crop cuts, they will harvest with them from that area and get the wet weight. Then after that, what has been harvested from that area will be dried to determine the dry weight. Then that portion that has been dried will now be extrapolated to say, okay, if from an area of 2 by 2 square meters, you got 20 kilos, what would that mean if it was an entire acre? Okay? So we are able to know now from this farmer, on average, I mean, they should have harvested so many kilos from 1 acre. Then from the 100 farmers I talked about, we sampled, that will be done if they are in the same unit area of insurance, and we get an average for them. Assuming on average, this one got 20, like from the 20 it translated into 800 kilos per acre. Then other people got 650, 750. We get an average for the 100. Okay? Now from that average of the 100, we apply it to the 1,000 farmers. Okay? So we'll have done the measuring for a few. Yes, it has a cost in sending, but we have not gone to every garden to measure. And from there, now we are able to determine. Now, if the average that has been harvested is 800 kilos, that means there's a deviation from the 1,000 kilos we're expecting, isn't it? Because we had said initially, red corner, people normally get 1,000 kilos, but now it has turned out they have got 800 kilos. That means there's been a loss in average for the farmers in this area. And now that means everyone, irrespective of whether for you got 650, whether for you actually got the full 1,000 and things like that, everyone in the sub-county will be compensated for, let's say, the 200 kilos that were lost. So that is how the area yield index works. We determine on the unit areas, because now the average is set on a specific area, which is normally an agricultural zone, because the environment is normally the same. And that is how that is extrapolated. Under this product, we insure farmers against drought, pests, plant diseases, floods, hailstorms, excessive rainfall. There are more risks under this that are covered. And then the exclusions are theft, war, animal encroachment. Those are risks we do not insure, but there is a catch when it comes to this product. We need to have very many farmers being on it. So if, for example, your microfinance institution is targeting maize farmers and is going to finance 2,000, 3,000 maize farmers, then it makes sense for you to come and request for the area yield indexation, because we'll have many and they are all in the same enterprise, and then we'll be able to determine the expected average yield for those farmers, and we'll be able to compensate them. How the consortium works or the scheme works, we work with, this is the model, this is the second last slide. You have the consortium here, and then we have the financial institutions, MFIs, the circles coming in here. So the MFI can deal directly with the consortium, and then the MFI is dealing with the farmers here who are getting the service. We insure, and when the farmers suffer loss, we give the money to the MFI, then the MFI will do what? Will be able to compensate the farmer. And then if we are dealing directly with the farmer organization, there also we can, that's still the same process. We deal with the farmer organization, but at the end of the day, the beneficiaries are the farmers. On the other hand, we can deal with the off-takers. These are now buyers or input dealers who are now interacting with the farmers. We can insure the produce, the farmers, by them incorporating the cost of insurance in the cost of the inputs, whatever they are doing, because you can decide to be, as I'm giving my farmers inputs, I can decide also to finance them for their insurance. Okay? It becomes part of their input costs. And then when they suffer loss, we pay the off-taker, and then the off-taker can take off the loan they had given them, and then they can give the rest to the farmer. Then ag techs and fintechs also, they have the systems Probably some of them are into financing farmers and you name it. We can also interact with farmers through that. So generally, that is the structure of how we work. It doesn't matter. All we need to understand, how do you operate? And through the way you operate, we can see how we can incorporate agriculture insurance. Now, you might see me, John Makosia here from the Agro Consortium. You think these are just probably businessmen. I said we are 13 insurance companies, but the scheme has stakeholders, and on a quarterly basis, we provide updates on how the scheme has been doing. And we normally sit in the President's office, sorry, not President's office, Ministry of Finance, to provide updates on the uptake of the scheme. And of course, Ministry of Finance is the lead there. You have Ministry of Agriculture, you have the Insurance Regulatory Authority, who validate the information so that we don't get excited and create ghosts. The farmers have to exist. When we say the farmer has paid, there are times even call those farmers to find out, did you get agriculture insurance? Did you actually borrow a loan somewhere? And they're able to validate the farmers do exist. Then Bank of Uganda comes in because of the financial institutions where we are insuring. And then, but Bank of Uganda in itself is where the escrow account is held, where the premium subsidy is held. That's why they also come in. Then you have the Bankers Association for the financial institutions. Then you have development agencies that are dealing with some of the farmers, Ghana National Farmers Cooperative, Cooperative Alliance, Prime Minister's Office for Disaster Preparedness, the refugees, and you name it. There was a lady, she has disappeared, who talked about the FSD, refugees. We do work with the refugees, what communities, to ensure them, and we normally get clearance through the Prime Minister's Office. Ministry of Trade and Cooperatives for the cooperatives and SACCOs, and then President's Office. All those are stakeholders in the national scheme. Just to provide you with figures on how the scheme has been doing over the last 6-7 years. And these are figures as at June last year, 2023, because now we follow the financial years. Okay? Initially, for the first 5 years, we're expected to insure loans up to about 900 billion, but we did exceed that target, and it was increased to 1.85 trillion. Another 900 billion was what was added to that for the next 4 years. And as at end of June, we had insured loans, financial institution loans of 1.6 trillion. So we were about to achieve the target by 90.3%, and I don't think in the next 1 year we are going to fail to cover this 178 billion. Increase in agriculture insurance premiums, we had achieved 42.9 billion after the first 5 years. So we're given a target of 91 billion. So far, we had reached 90.3 billion. So we're at 99.5% of achieving that target. And then the farmers, the target initially here, we had been given a target over the first 5 years of 50,000. But we insured 265,000 farmers. So for the next 4 years, we were asked to reach a target of 500,000 farmers. We had reached 708,000 farmers by 30th June last year. So we are at 141%. And then when it comes to increasing interface through, let's say, radio talk shows and you name it, this of course is repetitive. Some people have listened to the same program. So we have also at 107% as far as that target is concerned. And this is the last slide. This one is the last one. I was asked to share how the uptake on insurance is, let's say, this is for the second phase, still a bit of the second phase. And aquaculture, there were just 6 farmers, but they had insured a total of about 1.5 billion. Under crop weather index insurance, we have 22,000. And then livestock, there are just a few farmers, but we are trying to increase the number of livestock farmers also taking up insurance. And then the multi-peril, that's people who are taking multiple risk, but most of these under multi-peril is more of named peril, but covering drought mainly. We have that 88,000, and then the area yield, we have 340,000, because like I said, some people now, organizations, when they look at it, they are going to fund particular farmers, in particular, these are off-takers, they come and take up the area yield index insurance. Then the plantations, they're just 23 farmers, but insuring so much. And then poultry, we have mainly the big poultry farms coming in with that. I think with that, I would like to say thank you. That is it. Thank you.
Thank you very much. We are going to catch a few questions. You have been waiting?
Yeah.
One?
The question.
Okay. The
I will
first
return
question.
to the area use index insurance. And it's cynical to say that you can insure your own mismanagement if you arrive at a yield of 80% and on average it is 100, but it is caused by your own mismanagement.
Sorry,
Indifferent
sorry, I've missed that.
in your area use index insurance. You say that it's the average yield that you would should have in a specific area.
Yeah.
If the yield is much lower due to your own mismanagement, it's also insured.
Yes,
Yeah, because you can insure your own mismanagement.
Yeah.
You have to pay the premiums.
true.
Cynical, huh?
Okay, yeah, it is.
Okay, correct?
Correct.
Okay.
It's part of our basis risk.
Okay.
Yes, sir.
Thank you very much. I am missing a clear understanding of how you cover the livestock. Some more clarification on existing livestock insurance.
Okay. Maybe I take several questions, then I can answer at once? Or I answer directly that one?
Yeah, actually my question was on that also.
Okay.
The livestock insurance product, how does that work?
Okay. Now the livestock insurance product, being a multi-peril kind of product, is when farmers, we have two products for livestock insurance. We have the index one, I did not mention it, where we monitor the pasture. And depending on the greenness and the availability of pasture, if there's been a drought, that means either the cattle did not attain the required weight or there was loss in milk production. So that one, we can do it for still the small scale farmers, where now even the large scale farmers can do that. Loss in production, we can use satellite on that. But when we are looking at mortality, now what happens is you tell us the number of cattle you have, assuming you have 100 heads of cattle, 3 bulls, how many heifers, what, you list the animals and value of each animal. Okay, so some animals may be worth 2 million, others 1 million, others 500,000, and even others even 10 million shillings. Now, after you've listed them, then we'll give you a quotation, and normally depending on the kind of animals you have, if it is dairy cattle, we'll charge you 5% of the total value now. We'll have added after adding all these individual values of the cows. If it is beef cattle, we'll charge you 4%. If your cattle are local cattle, we'll charge you 3.5% of the value of the cattle. Then, after we've done that, we'll tell you what the premium is. We'll tell you when you pay that, we'll send a vet. This time you're not sending an agronomist. We send a vet now, first of all, to confirm the number of cattle. And the challenge we've been having, cattle are put on the scheme because of Western Uganda. And people have sentimental attachment. They want you to count their cows. So at times you have got to be smart. When you are counting the cows, you don't look, you don't physically do that. You look and count in your mind and know these cattle are like this, they are this number. And then also look at the values they have given. Are those values exactly the value that you'd be able to sell this cow? Because there's a tendency of people exaggerating the value of the cattle. So the vet would be able also to determine that, and then if there are any other recommendations, they will be able to give those. And then would be able now to issue a policy to the farmer at that point covering these animals. And normally what we do, we also tag the animals. But if they already have tags, and of course we need to agree with the farmer, I don't want you again to begin shifting tags between animals. And of course, if you have your farm, we expect you to insure all the animals on your farm. Because what if you may decide to only insure the weak ones, and when they die, then we have a problem. So we want you to insure all so that we are not subjected to selective insurance. And then, of course, so that if an animal dies, we should be able to take a photograph of the carcass to confirm this is the animal that was insured. And once it dies, the vet checks, confirms the cause of death. If it's among the insured risks, we compensate you. Okay? Yes, sir.
One question.
Mm.
Rainfall index-based insurance for smallholder farmers.
Mm.
We try to drought-prone area, but we challenge is rainfall measurement and now getting the data.
Mm.
After we solve the problem to the customer, the rain will rain around here in the road to that area because smallholder are in dispersed ways. How it could be possible to manage or get the data of all the area of the disease? That there is a rain station everywhere, or how it could be possible to manage?
Okay, now our data, like you are focusing on use of rain gauges. Now in Uganda, our weather stations are sparsely populated. And in some places, I think the weather station is there in name. And what we do, we have a service provider who was initially based in the Netherlands, but now they are based in the US. They do the monitoring. They get the satellite data for the different sub-counties. We want to take it down to the parish. The only challenge we've been having is we are still following up on government to provide us with the files for the different parishes, so that we narrow down the area. Because true, like you said, it could rain here, it doesn't rain the other side, but that is now creates what you would call spatial basis risk, because if you are very far from me, then what happens the other side could be different from what's happening here. So we are trying to narrow it down to the parish so that they are able to provide us with satellite data for every parish, where at least farmers can relate with what has transpired. And experience has shown many times you'll go and tell people, because you have been using sub-counties, and people say, actually that sub-county, the really things were bad there. The other sub-county was better than us. And they're able to normally relate. But when some sub-counties are quite big, we want to bring it down to the smaller ones. But then, yes, there is still a challenge. If you have a big feature, like let's say a mountain, there was a time we had satellite data and information which talked about 20% loss for farmers. We went there to compensate the farmer. Then we sent them what you would call the discharge voucher. They signed. And when we went on the ground and were giving them 20% of what we said they had suffered 20% loss, some farmers were not happy. And they said we suffered total loss for us. And when we actually went where their farms were located, it turned out they were on the leeward side of the mountain. So they were all in the same sub-county, but these people were the other side of the mountain. So their data was a bit different. So we used their chips and were able now to find that actually for them they did suffer 80% loss. And we compensated them to the extent of loss they suffered. Yes. Yes, sir.
Yeah, thank you, John. And my first point of interest is on the second last where you're showing that.
That one?
Now yes, that one there.
Mm.
Yeah, this is the update on the performance of that.
The national scheme. Mm.
Yeah, exactly.
Mm.
How I wish that we would also get a statistics on the compensations.
Mm.
And then, yes, we get to know that, yes, there is some, at least in this particular time, this people, this much was paid out in compensation and, like that.
Okay.
I don't know.
Uh,
Because it has more weight on
Okay.
to get to understand the contribution so far.
Mm.
Yes. And then another thing is, like I said, for our case as an institution, yes, we have embraced Agro Greek insurance, and yes, we are in the process of procuring actually. And the information we had somewhere was that we go through the insurance companies that subscribe to the Agro consortium. I don't know whether we're on the right track, because at one point I see that we can deal with you guys directly, or so I would seek some clarification. Thank you.
Okay. Yeah, on that second question is the issue of people who want to go to God through Mary. I mean, you go to Jesus through Mary, there are those who go straight to Jesus, isn't it? That's the scenario. But the destination is still the same. Now, what happens is the members of the consortium, we represent them. And the truth of the matter is many of them don't even understand this product as well. When you ask 2-3 questions, the next question they are going to call us and we'll guide them on what to do. Okay? So it is better and easier you come to us, but if you are already leaning towards a particular insurer, when we give you eventually the insurance policy, it will be in the names of that insurance company. But they will be working in association with the consortium. Our policy is, let's say if it is Jubilee, it is Jubilee Insurance with association. Because one of them has got to be the lead. Because the person you know. And that will be the lead insurer. But everyone else will share on the money. And when it comes to compensating you, they will all contribute towards compensating you. So all those, that is not very important for now. The important thing you want to cover, you can talk to us, we'll handle you. And then eventually, we'll say, okay, this is the lead from amongst the members we have. But of course, it's done in consultation with you. Yeah. And then when it comes to the claims you mentioned about, what I know is that unfortunately my figures are in calendar years. I would have, there's a slide, but it's going to take a bit of time to find it. Last year, we made compensation of about 10 billion. Just last year. So the last calendar year. So because you see, we have a challenge. The scheme is on a financial year basis. But now the partners and the treaties we hold are on calendar years. So we declare now figures according to the calendar years. So yeah, but otherwise we paid about 10 billion shillings in compensation last year. Okay. Hey, I'm opening more questions. Yeah.
Okay, mine is a question. Do you have instances where you have not compensated or you have failed to compensate a farmer due to negligence on their part? And how do you handle those cases, or how do you educate farmers who are still in such occurrences?
Yes, the question shouldn't be we have failed. We say we have not compensated for a particular reason. I'll give a simple example. Some farmer in Kamuli came, got insurance. Okay, we sent. He had planted 60 acres. We sent an agronomist, measured. We found already a part of the garden was affected by termites. He was told what to do. He was told when to apply some fertilizer. And after applying fertilizer, the guy came back to Kampala with the agronomist. When the people went back, according to what he had been told to do, yes, he had applied fertilizer, but his workers, he bought the fertilizer, but the workers only applied the fertilizer along the paths, along the roads. Now, when time for harvest came, they were not weeding. The termites had continued cutting the what? The maize. Now, of course, this, if he had done what he had been told on managing the termites, he would not have continued, because the termites had contributed up to about 20% of the loss. Weeds had contributed a big percentage. He was just fortunate that there was a drought also at the time. And when we compensated, we looked at the portion the drought contributed towards the loss. And that's what we said, according to the risks you are insured against. Drought contributed so much, and we gave them compensation for the drought part. But the bit where you had not sprayed, managed the termites, the bit where you had not weeded this crop, all those loss effects, we said no. Those are now exclusions because you did not do your part. Okay? Cases where it could happen, whereby we have not compensated somebody. For example, you've taken on the weather index insurance. Okay? You are covered against drought and excessive rainfall. The place floods and you suffer loss. The problem is the product you are given did not cover the risk. And true enough, yes, we do acknowledge you have suffered loss. The only challenge is it was not an insured risk. So we will not compensate you. So it's important to first of all understand what risks are you insured for and what has caused the loss. So it can go either way, the cause of the loss. I hope I've answered your question. Yes, sir.
Okay, I'm just you said that data is every 15 is taken after every
The images are taken every 15 minutes,
so
yes.
how possible is it? How possible is it to compile that data as soon as possible? And maybe the other thing is how soon does the compensation come in case of any loss to the farm?
Okay. Now, like we said, the data is cumulative. Okay. What is happening on a daily basis? Now, what happens is, under normal, okay, we could be able to provide farmers with updates mid-season on what is happening. And then at the end of the season, we normally give it 2 weeks. Assuming this season is ending on the 31st of July, okay? This season that is on, or that is starting in some areas, is ending on the 31st of July. 2 weeks after that, we will have received the satellite data and information, and now from there would be able to share that information with your group or your circle or whatever, or MFI, and tell you whether farmers have suffered loss in your area or not. And once we have shared that, and you agree, assuming there's a compensation, you sign what we call a discharge voucher. And the moment you have signed the discharge voucher, it tells us where you want us to send the compensation. Normally, under normal circumstances, we talk about 6 weeks. But if you do not agree with the results, assuming the farmer suffered more loss on the ground, then a fresh discussion begins from there. Why do you think? Then we send people on the ground. By the time we verify, come up with a report, we might go into another 2-3 weeks. And eventually we need to agree on something before we compensate. But under normal circumstances, we say within 6 weeks, we should have compensated you. Yep. Yes, sir.
Can you speak closer, please? Okay, sorry.
Yeah, I have a question on weather indication. Do you have a different station to protect the data of the weather, or it can be present for all? My question is, am I clear?
Yeah, I've answered your question, and I think I tried to answer it earlier on. We do not have enough weather stations in Uganda because you have one in every district, okay? And some districts also don't have even weather station. So you may even find, just like in Karamoja, there could be 1 or 2. And it has, are there 8 districts in Karamoja region? Now what happens is we outsource the service. Actually, people who started with us when I think we were being supported by the Netherlands Space Office to provide, they get satellite data. It's always available. There are links you can even go to, and you can be able to get rainfall data for different places. But now, of course, that information is validated by the Uganda National Meteorological Authority. But now for us, the service providers now use that satellite data at every sub-county. But otherwise, which brings that every sub-county and want to go down to every parish. But as far as weather stations are concerned, distribution is not yet good enough. But there's a program we are trying to work with the National Meteorological Authority, where I think a funder is coming in and will help them build capacity. Now using our satellite data we are using, and then plus these weather stations, they can begin now so that we are able eventually to be able to use our local weather stations. But that is going to take time. But it's something in the works. Okay? Thank you. Yes, sir.
John, how important is the contribution the government gives you as a subsidy for you as a consortium to break even? And will the government continue to give subsidies even if you grow your business?
You are through? Or I cut you short? Okay. Of course, the subsidy was very important in being able to develop agriculture insurance, because the understanding was initially, after about 3 years of providing agriculture insurance, we only had 5,000 farmers in the whole country. And some of them, I think, those my brother were talking with there, the organization he was with was among those that piloted the program. And we only had about 5,000 farmers. But now, and the premium rates were quite high at the time. Now with the government coming in, the understanding was we are going to insure farmers across the entire country. And what that brings on board in insurance, I work on numbers and distribution, because I don't want to concentrate my risk in a particular area. Okay? For example, if there's swine fever, it can hit an entire district. And if I have all my pig farmers within that district, I can be wiped out. I'll have collected only 7% of the value. Where do I get the money now to compensate them? I'll have to depend on reinsurers. But when I have this risk spread out, I have some here, others in Germany, others where, when it strikes one district, then the money I'll have collected everywhere else, I'll be able to do what? To compensate the few that are affected. So it's on that principle. We are collecting money, small amounts of money, from the whole country, on the understanding the whole country will not be affected at once. And then we are able to take care of the few that are affected. But should fate have it that the whole of Uganda is affected, we have also been smart enough to insure ourselves with the Swiss Re's, the Alliance Re's that are insured in the whole world. They will have collected money in Brazil, China, Russia, where, and they will be able to do what? Take care of the whole of Uganda. So with the scheme being in place, we have spread our risk, lowered the premiums, and we see as time goes on, of course, the premiums will even are likely to go lower as more and more people take up, and who knows, maybe we may never need the subsidy going forward. But as we speak right now, we are not yet there. Okay? Yes.
Can we clap for him? If you are okay, just wake up and came behind here. We can do something before come back.
When I say the river, everybody must jump in the river. When I say out, everybody must jump out of the river. It's simple, no? And then the main road, let it start again. When I say river, everybody must jump in there. When I say out, everybody must jump out of river. It's simple. And the main road, you must do
You must do what I'm saying, but not what I'm doing. Because if you want to do what I'm doing, you may fail sometimes. Are we okay? We try. Okay. River. Out of river. Okay. We repeat again. River. Out of river. And then if man just go. Okay. River. After river. River. After river. River. After river. After river.
No. First,
Matfa?
Bob.
From Matfa? Huh? Tell me.
No, I will open. Huh?
Yes, I think it. Okay. Matfa Sako. You have a testimony in agricultural insurance. We are going to take it off. Okay, come on. Sorry. Okay, you have a few minutes.
Just hold on,
Give
I'll
your
open.
testimony.
I'll open.
Okay. Okay, you have the floor.
Good afternoon, ladies and gentlemen. From our experience, we have been doing this crop insurance for the last 3 years. So we have an MOU with Sanlam, a tripartite. Sanlam is the insurance company and the Agri Consortium and Madfa Sako. So our members are insured against the weather-based index. We deal with smallholder farmers. Because we say our cooperative was started by smallholder farmers, and we are talking about 90% smallholder farmers. And this is the most convenient product for them, just as they have been explained. In our framework, is we wanted to de-risk the smallholder farmers we are selling. And one thing we thought we could do was to have them insured. And so we made it compulsory for smallholder farmers because smallholder farmers don't have alternative sources of income, like the commercial farmers. All their focus is on the crop. And so we use the weather index. I will not go into the details of the weather index because they have been fully explained by the person who knows them better. I will only talk about what we do. Now, as he said, there are 3 options for insuring. You can either insure the yield, expected yield, or the cost of inputs, or the loan. But now in our case, the members don't have the capacity to pay the premiums upfront themselves. That is the challenge they have. Much as they would need insurance, but they don't have the capacity to pay the premiums upfront. So we looked for a solution, a win-win, how we can have the farmers insured, but also pay the premiums gradually during the course of the loan. So what we did was to factor in the premium, but then of course we were looking at the subsidies, so the farmer was supposed to have 5%, and the government was giving a subsidy of 50%, so meaning they have the 2.5%. So when you compute the other levies and the training levy, and then that time we had stamp duty, it would go to 2.75, what a farmer was supposed to go to. So approximately 3%. And since our agriculture loans are 6 months, so what we were doing was to add the 0.5% on the interest, monthly interest the farmer pays. So in 6 months, we're able to recoup the 2.75. So we change our interest rate from 2.5% to smallholder farmers, 3%, with a 0.5% to go towards catering their premium. So we'll pay for them the premium in advance to the insurer, and then we'll wait. We keep recovering this month. So the change, there was a difference of 0.25%. That was also to protect the institution against loss, because not every farmer may pay. So there could be incidences of default. Then the 0.25% we are collecting from all the farmers could hedge against the risk of those who may not be able to pay the premium while we're paying for them. So that is how our system works. So the insurance company usually gives us the planting windows. Between farmers should plant it for specific crops and regions. Say, for example, Western region should plant between these dates and these dates. So one thing is to make sure the farmers are planted during those times, because the risk is I think, assessed from the satellite, and those are the times the farmers have to plant in those specific times. So, as I said, we're insuring only the loan facility, the money of advance to the members, because the interest is a factor of the loan. So I think that one I've explained. So what are the key roles here? The insurers, they give us the crop insurance services in line with the best industrial practices. They're talking about the supervision by the Insurance Regulatory Authority. The trainings, trainings for staff about the insurance, how it works. Then they're supposed to give us the weather forecast information, the planting windows, what is the best time for the farmer to plant, and when should the farmer be able out of the planting window. Then the insurance premiums and payouts, because we send a list of the farmers that are supposed to be, who would like to have insurance, or who have requested for insurance. Then they compute the premiums, send us a quotation, and we're able to pay the premiums, but also the payouts, because they look at because for us we usually get the reports about the impact in the different locations, because we're working in 4 districts. So they say maybe in Hoima district, this was the impact. In Masini district, there was not much impact. The difference is, when we are certified, as I said, we go ahead and receive the compensations, or we agree with the report. When you're not certified in some locations, then you can still engage them further. So they're supposed to give us those index reports to know how the performance, but also compensating the members that involved. Then for Madifa Sacco, we're creating awareness among our membership to make sure members understand, because it is a little bit challenging if you're adopting it. Because if the members don't understand it, you get challenges. Because the member may pay the premium and then says, me, I'm under crop insurance. So if a member fails to realize harvest, or to realize the expected yield, because of any other reason, could even be about poor farm management, he comes and says, no, for me, I'm uninsured, so I'm not going to pay back them. So there are those risks which we need to manage very well. So information to members is very critical, so that the members understand what is involved. Then timely submission of the member schedule is also very important. Last year we had a very experience. The subsidy has also become very competitive. Last year we submitted some members who benefited from the subsidies. The second phase of the members who submitted from the subsidy had been used up, exhausted. Yes. And then we are supposed now to pay 100%. But we told the farmers government is giving me 50%. So now we are stuck. Do we take back the money to the farmers? So as an institution, we ended up paying contributing the services. Because we had already sent the information to the fund. So this information has been time, but we also maybe keep urging the government to increase it, because if all of us still submit in time, what will happen? I don't know the criteria we will use to see this one gets and this one doesn't. And the other one is timely payments of the policy premiums on behalf of the members, because they want these payments also to be done in time. And lastly is recovered of the prepaid premiums from the members. We're giving out the premiums out to the members. We have to make sure that we are able to recover all this money. So this money is from the consolidated farming society, and we have to make sure. Then the members here, obligations of the member is one, the members have to respect the planting windows. Because if a member doesn't respect the planting windows, much as they don't come to supervise, the member still has the risk he's carrying, because if their satellite data is saying this area was not affected, but for you are planted outside the planting window and you are affected, then there's going to be a conflict. So it has to be, member has to respect the planting windows. Then basic records track financials of the farm should also be trained to the members. Just basic record keeping. Should see the investment is putting in the farm and expected output and the yield, just to guide the member how the member can increase the yield, the profitability from the farm. Such kind of basic financial literacy is also very critical for success, so that members appreciate. If the members don't see the profits they're going to make from the farm, they may not be willing to even sacrifice to pay for the insurance premiums. Then the members also have an obligation to refund the insurance premium that was paid in advance for them through regular payments of their installments and interest.
On the insurance.
Yeah. Huh? Maybe just to share our experience, 2 or 3 challenges we've had about this as an institution is about the feedback. Feedback. You know, when the season ends, the time it takes to get the feedback, you know, usually our loans are structured in a way that the farmer should pay within maybe 6 months. And the 6 months are counted at the beginning of when the loan is being given. When the season is starting, the farmer is getting, we start counting. And then maybe we leave time of 1 or 2 months. But also the farmers are paying according to projections. Now, usually, the members would want to get information as soon as possible about the outcome of the insurance policy. Whether the insurance policy is going to get, especially when they have suffered loss. Like when we have prolonged dry spells, the members want to know how is the insurance going to benefit them. But during that time, you don't have information because you have not gotten any report from the insurer. So you cannot tell them whether the insurance is going to compensate them, whether they are not going to be compensated, because you don't have any information. So that one is a very big challenge, because it creates non-performing loans. Some members may stubbornly refuse to pay the loans, expecting the insurance to come and compensate them. And you, as an institution, you are not also sure whether the insurance is going to compensate them. Because I'll give an example for last season. This is March, Feb. We're in Feb, and we're just receiving the information about last season, season 2 of 2022. But the harvest started around December, January. So you can see there is that delay, which may have risk implication to the institution, and maybe you could find. And when he says maybe you could think, to me that is a good option. We could think of regular information, maybe mid-season information could also come in, so that we have an idea of what would also be expecting. That has been one of the key main challenges. Then the other main challenge is about the deductibles. The deductibles. You see, insurance is also very interesting. So they have words that... now, when we're starting the program, you'd ensure, okay, if you have insured 1 million, the farmer has taken a loan of 1 million shillings. Are we together? So meaning it is 1 million shilling that is insured. So when they are calculating compensation, initially when we were starting, it was 90%. So there was a deductible of 10%. So when they are calculating the compensation, you see when it says there's a loss, maybe the loss was 50%. So they first remove the deductible, which is 10%, and then you remain with 900,000. Are we together? Then they calculate the 50% loss, which is 450. But over time, I think last season it was reduced to 65%. The deductible was increased to 35%. So now meaning when you have insured 1 million, are we together? When they're calculating the compensation, they're calculating it on 650. Are we together? So that deductible is also not, and I think we have the right person here, that deductible is also squeezing the farmer. We need to see what are the causes of that deductible, because even the institution, because the farmer knows, I've insured me 1 million. I've paid premium on 1 million. But now here, the farmer is being compensated on 650. Meaning the farmer has to cover the 350 in the event of 100% loss. So now explaining that to a farmer is a tug of war. And usually it results into non-performing loans to the institution and write-offs. So that's our experience with the crop insurance. Thank you. Yes?
I have a question. How does this work in group lending? Does it see for individual farmer and for group?
Yes, it works for group lending because our members are in groups, but we have individuals in the groups. So every group has individuals that are going to take the loan amounts. So when we're giving the schedules we're giving to the insurers, we give a schedule of the individual members in the groups, and then the amount they're insuring.
Yes, how much percentage of your portfolio is under the
I think it is about 32%, between 30 and 35% around there.
So where is the rest is not insured?
Of course, the rest is in other products. You wanted the entire portfolio or the agriculture? The agriculture. Yes, we have exemptions. The agriculture is about, we talk about 60%. Because we have still exemptions, we said for commercial farmers or farmers that have alternatives, it is optional. But the smaller farmers, it is compulsory. Yes.
For me, I would kindly ask the consortium to use this platform to make a clarification on the platform, because other institutions are still in the process of their processing decisions on how to calculate. And there is already that unanswered scenario about that. So it would be good to explain it.
Yeah.
And also the delay in reporting, is it because of the other version you gave us, or it's different, given now the context you have presented?
I think there is a right person to give those answers. Okay. Thank you.
I thought you still had the platform. So, but at times the cause of the delay. Yeah, thank you so much for that feedback. At least people know there's a convent here. I think there are other people also around. But now, what at times causes the delay in the communication is we at times don't want to be in a hurry to give the feedback, because you see it's embarrassing for us to say there was the case of that place in Kasese where we talked of 20% loss, and then when we went on the ground, it turned out some people in that same sub-county had a different experience. So at times we first want, because I remember we had a scenario in Karamoja where we gave monitoring results. And later on, it turned out after looking at some of these basis risk issues, the results were different. And the people at that point, their communication was, it seems this thing is for gambling. You get it? So to try to avoid that, we normally want, after we have received the satellite data, we do sample out some cases and compare with chips also to make sure everything is in line. Okay? And then even that aside, we still send people, this time at our cost, just to make sure to eliminate the element of basis risk. So and so, Robert, they talked of having drought at their place. Maybe let's send somebody there to check with the farmers in Nyaravuru and cross-check, so that when what they see there, we can compare with our results also. And then so that at times we do sample out some cases and then compare with what we have, so that we are able to finally come up with a position. So that by the time we communicate it, it's actually, at least it's realistic, and it's, I mean, at least they appreciate the results. Because we don't want to have the back and forth after. Because it will seem like it's because you complained, that's why we did what? We revised the reasons. But actually we're just trying now to make sure by the time we communicate, it's a final position.
Yeah, but for me, when you say what you are telling me now, the farmers, we have certain things confirmed. Isn't that communication that can give confidence to farmers also the submission? It seems even that you don't.
Yeah, I think that's where probably we are going wrong. We are not keeping them updated on the process. Yeah, but come 2024, we told guys we have to go to do things differently. We've got to keep, we have actually even appointed relationship managers for clients to make sure there's constant communication. Where we have given somebody a quotation, if they have not responded, we follow up. Why haven't you paid? If you are reconsidering whatever it is, then we understand that probably for one reason or another you have not taken up the cover. So there's a bit of a change in that area, and I believe there's going to be an improvement. Now the issue of the deductible. Like I communicated, we agreed on a premium rate with the government of Uganda on different areas. Like for example, I think we have spoken to for cattle, we are spoken of dairy 5%, 4% for beef, 3.5% for local cattle. When it comes to fish farming, it was 6%. Weather index insurance, small scale farmers, it was 5.5%. Multi-peril crop insurance, 5%. All those rates had been agreed on. Now, we realized what would happen is this. Now, we are taken on an average premium rate. Just like when we agree with the financial institution, we are not going to begin giving individual premium rates for everyone. We may agree on a flat rate so that it is easier for your branches to apply for the loans. Now, the challenge is when you are in different sub-counties or different localities, the risk profiling on those places does what? It changes, okay? Now, because of those differences in the risk profiling, you realize that you have paid knowing you have full premium. I mean, you have been insured for 1 million shillings, but because of the risk profiling of where the farmer is located, the premium they paid would only insure them for 65%, because we've given you an average rate of 5.5. So you find that now what you have, the 5.5 would only insure you for 65%. Then for another farmer, it is 70%. And then for another one, gets the 90% he spoke about. So when it comes to getting the monitoring results at the end, you find that because of that risk profiling, you find people are compensated differently because of the risk profiling of where they are based. Now, we were having discrepancies with farmers. At times when we tell them you suffered only so much percent, but the loss was bigger than what we are telling them. And this was what was creating part of the problem. So we decided to be giving the farmers two quotations. Quotation number one, because of your location, you will pay the 5.5%. When you pay the 5.5%, then you will only get 65% coverage. But if you pay 8%, you will get the full coverage. So you decide which one you want. So the farmer at that point now, or the organization can decide to do what? To go ahead and get the coverage they want. Now, just like he had mentioned, they are already in a dilemma. They have already collected 5.5%. Now, how do you go back and ask for the other 2.5% to get to the 8%? It becomes a problem. So that is where the problem or the discrepancy comes in. And that's what creates the deductible. Because of the varying risk profiling of the places, and yet we have this general agreement with the government that we shall be charging that premium rate. And the reason as to why the government set that was because they did not want the insurance companies, because we are collecting 50%, we just ask for 8%. Because that means we get, the 50% is now 4%, and not the 2.75 we had spoken about earlier on. So to safeguard against insurance companies raising that, they set a cap on the premium rate.
Yeah, but still there is a knowledge gap there between you and the people you support. Because if they knew that, they would be able to explain it to the farmers. But when the farmers come, they are stranded.
Yes.
So I think that
It's
is
financial education.
Yeah, exactly. I think that is what I picked immediately also between you and the people you support, and also between you and even the farmers, and even between the people you support and the farmers. And you see, unless that is solved, we shall always have challenges when we are promoting insurance. I don't know the kind of percentage we have in Uganda, but I doubt if it goes even to 1%. And these are some of the challenges. Now, you know, even in other insurance packages, even when you are insuring your vehicle or your something, you know, insurance has this habit of sometimes not disclosing every information. And it is only discovered when the event happens that you say now you did not have this. When you did not even inform them when they were buying the what? The policy. So I think that communication should be streamlined right away from the point of engagement.
Okay, yeah, I think, like I said, it's been a learning process for us. And I believe my brother, I think when they got the quotation for last season, they must have received 2 quotations. And that 65% was communicated in the policy. So at least at that point, I think maybe the error would have been they did not know at the time they were disbursing, and for them to be able to plan for it. Yeah, but otherwise, yeah, we want to make sure we create as much awareness, and I'm going to make sure we at least make sure everyone is updated, irrespective of their financial institutions, for them to know, because we've been insisting in the policy, indicate it, and we are now taking it to another level and telling whoever, before they sign the policy, they have read and understood that part of the coverage that is being provided for them. Thank you.
Yeah, because Bob, it seemed to me when you explained it that the insurance that is factored in the interest rate is actually a hidden cost to the farmer. Did I get it right or wrong? You got it wrong. It's not a hidden cost, but it is a cost. It's a cost that is explained to the farmer. We only put it on it. We agreed upon it with the farmer. We only add it to the interest because the farmer doesn't have capacity to pay the premium in advance.
They spread it along.
So we spread it, and the farmer paying 0.5%. Paying actually that's 0.5%. That's about maybe 15% or 18% of the insurance per month is manageable than paying 100%.
Yeah, I think because like the way he put it, like talked of the aggregator, they may decide to do what? Pay it for the farmer, and then for them they recover it at the time of compensation. Or else the farmer does what? Pays them back at the end.
Okay, can we continue with the second testimonial? Susan, come forward. Yeah.
From the interaction with different institutions that have implemented this insurance, sometimes they say to pay this premium in advance on that of the farmers, because the farmers have not yet conceptualized the concept. They don't have the confidence, the insurance, and for yet microfinance institutions are trying to hedge the risk. And they may not wait until the farmer is on board. So better to do it as they continue the discussion. At what point in time, after seeing the benefits, then they should be able to pay the premiums. That is one of the reasons why probably. And we all know the cold feet we have on insurance.
Maybe John could also give us some light about that. You know, the event that the customers, the premium has been spread in the period of 6 months. Is the policy on or not yet? Not until the full payment of the what? Of the total premium. Because you're looking at, is it? Yes.
Yeah, I think Bob, the way he put it, he's saying for them, they paid them upfront. But then they recover from the farmer gradually over the 6 months. Because that 2.75, they were rounding off sorry, to 3%, so 0.5 every month. So for them, they also recover it gradually. But otherwise, they pay upfront. Sorry. But we also have, we had an arrangement with a development partner, and what we had was what was called pay at harvest. If we have a farmer or an aggregator who has a mechanism of, like, let's say, is sure the farmers, he will pay for them the premium, and then what happens is when they are selling, to do what? At that time they will sell back to him the harvest, or then the harvest, they will be able to recover the premium at that point. That's where now pay at harvest would come in. Would have an arrangement, you are on cover, but then at the end of the season, when you harvest, you bring the premium in. But should you suffer loss, we will now use from the compensation we were supposed to give you, we would deduct it at that point. So that was an alternative. But of course, we had done it with a few clients. And it's something also, it's always to find ways of at least making farmers be able to take insurance.
Okay, thank you. Susan, can you come forward? Yeah?
Nelson.
Okay.
Good afternoon. So I'll be taking you through our products and the impact of insurance to our clients. First of all, just a brief overview. Fortune Credit, like I've said time and time again, we are an organization driven by social impact. Oh, sorry. Sorry.
Even if you can put it or you can.
Yeah, sorry. So we are driven by social impact, meaning our purpose and our aim and why we do what we do is because we want to impact the smallholder farmers by bringing to them financial inclusion. So one of the things that we realized as we gave them credit was that losses would occur, but they're not insured, and it's because they could not, like stated, they could not be able to afford the big policies offered by insurance companies. So we came up with a variety of products for them. And these are a couple of them. So I'll start off with the first two. Resilient Growth was a project we did with two companies, Ensuro and Ibisa. Ensuro is a capital provider for insurance risk. So they gather investors who will invest in insurance risk, and then Ibisa is a microinsurance firm. So we partnered with them to do this project called Resilient Growth. Resilient Growth was designed for crop farmers. So how it would work was a farmer would request for credit from us. Then they would go to the agrovet, which we have selected, to go and purchase an input, so a fertilizer. Then they'd go to their farms. When they open the fertilizer, there is a code that was input inside. So when they open the fertilizer, they use it, they can scratch the code, and then they'll dial a USSD, which would prompt us, which would initiate the warranty. The warranty would now, on our end, will now start monitoring the farms. In the event of loss, we will now insure them and now pay them and offer them payouts in the event of loss. So we partnered with those 3 organizations to offer that as a product to our clients. Then DRIVE stands for De-risking, Inclusion, and Value Enhancement for Pastoral Economies. So DRIVE was something that was brought about by our government. They partnered with World Bank. So it was focused towards the pastoralists because in the event of drought, they will lose their cattle. If they lose their cattle, they end up going into starvation because their cattle is their livelihood. That's what they're relying on. That's what they're looking for food. So how DRIVE works is World Bank would insure the farmers about 80% of the premium because the farmers were paying very low. They're paying about 2,000 shillings for the premium. And the cost is 16,820 shillings per TLU. So a TLU is the value of the cattle, or it's equivalent to 1 cattle or 10 goats, or 0.7% of a camel. Or not 0.7%, 0.7 of a camel. And so based on how many cattle or livestock a person has, it will determine how many TLUs they need. And so they would pay a very small amount, and then World Bank would cover them. And then in the event of drought, they would receive payouts. They would claim, and then they receive payouts. It was launched in August 2022. And so I want to invite Nelson to take us through the rest.
Thank you. We also do livestock insurance, whereby the clients pay 20% of the value of the animal. Maybe we are giving them loans to purchase a cow or a goat or whatever the livestock. So they pay 20% of the value, then we insure them. Maybe to go back a little bit, as Fortune Credit, Fortune itself, it has 3 companies that work together. We have the Fortune Credit, the credit arm. We have the Fortune Twiganet, which does the insurance part of it. Then we have the Fortune Connect, which does the technological part of it. So for livestock and the other insurance, we pass them through Fortune Twiganet. But we work with we work with insurance companies within the country to ensure that that is done. For the crop insurance, the crop is insured at a rate of 6.5%, and also passes through Fortune Twiganet, where we liaise with the insurance companies within the country. And in agri business also, there is the asset insurance bit, whereby for those clients who are taking assets to do agri business, maybe the tractors and any other assets, also we do insure them. We do insure them through Fortune Twiganet. Maybe in brief, that is what we do. Most of what we do also has been explained with John very well, and it is more or less the same as what we do. Maybe at that point, I think that is all I can say, because for the livestock insurance, crop and the asset insurance, it is quite well covered, even with other institutions in that does insurance. And we, apart from that, there is also the credit life, which covers all the insurance and also all the loans. And also, the benefit is that we have our own agency that we pass the insurance through. So we as a company also we get both the benefit from insurance and from the agri loans. I think we can move.
Yeah, can move to the next. So, as you mentioned, we have insured so far 4,000 clients. Sorry. Oh, it's stuck. Thank you. So we have insured about 4,000 clients so far. And the benefits of this is, first of all, it has helped them to prevent themselves from having to deal with the effects of loss. 2, it has helped them to have access to both credit and insurance. Thirdly, financial literacy, because when we do give them insurance, we do educate them, and also they see the benefits of it, because there are people who would not be served by, who would not actually even bother to go to get insurance because it's so expensive. They're already struggling to make ends meet. So telling them to pay for insurance would be at cost. They're wondering, should I really pay for it? I don't see the benefits of it. So it's one of the things that also they are gaining financial literacy about. And then also digital literacy, because we've used technologies such as blockchain in the product. So let me explain that a bit. So how blockchain works was, like I said, when we worked with for resilient growth, we gave them a code. So the code would be used to initiate, in the event of loss, a smart contract would be initiated, which would now then lead to would now lead to them claiming their money in the event that a loss has occurred. So that's how blockchain worked. So our future plans in regards to this is, first of all, we are planning to increase them to 10,000. This is, first of all, by digitizing our onboarding process. So we are using a manual process to onboard them through paper, and you're planning to digitize that to be able to help us to reach further areas and to also help us to scale and be able to do it faster and onboard more people. Secondly, we also want to offer them emergency credit collateralized by insurance. Like you said, we actually insure all our loans are insured. We have credit life insurance, which we insure for every loan. Then you also have for school fees, etc. So we are planning to do this especially with Drive, whereby we offer them now emergency credit. Because one of the things that we've noticed is that there's a delay in insurance payouts. So by the time somebody is receiving the insurance claims, the effects have already happened. They've probably already lost their cattle. So we want to be able to give the emergency credit so they can be able to mitigate the effects of drought. And then if they get the insurance payouts, if they did not pay their credit, we can be able to get our payments back. But if they have paid, they just also receive the money also. Yes, so far that's it. And you're looking also to partner with critical partners, both in Kenya and outside, to be able to scale these solutions and be able to advance beyond Kenya and to go further. I invite any questions.
Maybe before the questions, I can also expound something on blockchain. On blockchain, we majorly give insurance to the farmers who need farm input loans from us. And how we do it, immediately they apply for the loans, we give them the loans in form of farm input, and the input on the inputs, let me say a 50 kg bag has a scratch card. The seeds also, they have a scratch card, whereby during the day when the farmer is going to the farm, he or she will only be required to scratch the card, then send it through the USSD code, our USSD code. Then this will help us to count 21 days after planting. So the insurance covers 21 days after planting. In case of any weather challenges, then the farmer will be compensated the fertilizer and the seeds from the insurance company. Thank you.
questions. If there is a question, you can bring it. If not, we must go to have a coffee break. And then, you have question. One question.
They have already said that when they finance, let's say, cow, the 20% of this, the price will be coverage of insurance.
Yes.
To me, that you are at the same time financial institutions and the insurance company together.
Okay, as explained, we have an agency, TriggerNet Agency. It's an insurance firm which we created for the purposes of this. So what happens is somebody will borrow a loan, we will give them the loan. But part of their loan is paying for the insurance. So what will happen is we separate the money. So part of it will go for the 20% that you've stated, we now go for the insurance. We work with partners who provide these not loan products, these insurance products. So what happens is we pay the insurance companies, and then they pay us the commission. Yeah. That's understood? Okay.
If I may ask a question. 20% is the premium.
Yes.
You don't have any issues with clients complaining about it being very high?
Okay, so before we don't force it to take it, and then also the purpose that they see the importance of it. Because what happens if this cow, for example, dies? You won't be able to pay for your loan, and then you still also have lost your investment. So they see this is a set of educating your client and informing them about the importance of what you're doing. Because if you just tell them, if we hide it, they won't know, and then they'll just assume you're stealing money. So we explain to them what the product is, we explain to them the importance, and then now they take it up.
So the 20% is only for insurance?
Yes, it's only for insurance.
Okay, it looks like a big percentage, but that is what covers what the insurance companies gives us. Yeah, it's not that that is out of our own way. The loan, it is not for us. It is for the insurance towards the livestock. Yeah. So we normally educate them. Yeah, we educate them very well so that they understand. And in Kenya, most of the farmers who do livestock, they know the importance of insurance. Majority, they know. So we only come in to tell them, instead of going to insure it by yourself, then we as a company have a package also for you that we can sort your issues to do with insurance. And currently, I can say they are picking it up very well. Yeah, we don't have quite a challenge. Okay, yes.
When it comes to compensation, let's say when a cow dies or when the crop fails, how has the experience been when you are working through the agency?
Okay, as the same way the questions were asked to John, at some point we also have a challenge, but because of the education from the insurance companies on exactly what they do, or the deductions and whatever. It applies even to our side. But at least to some extent, our clients get the compensation quite early, a little bit. But still there are areas that are not handled very well with the insurance firms, even in Kenya. Yeah.
So the insurance firms is like, operating the same.
Okay, thank you.
Thanks for you. So we just go now to have a coffee break and invite you to taste another product of the value chain coming from Mupesi. You will taste the coffee of Cameroon. And then no, is that this on? It's only because it's not the same paper as the natural one or the traditional one. It's only because you have been afraid, so that you did not put it enough. How you put it small and then you are thinking that you have the
Potato bread was.
It was good, no? Okay. We have another.
It's more than hot enough.
It's hot enough, you see. It depends on you. Please understand, get it.
After the coffee break, we are going to have the presentation, but we give 20, I agreed with Herbert and also with Casaun that they will each take 20 minutes just to present their part. And then Jean-Olivier is also going to explain about this
Value chain.
This value chain.
Yeah.
But I think it will, we will be just maybe a little bit after 6, but not too much.
Okay, no problem. If okay, just we just move to have yeah. I'm still waiting for your feedback. Hey, your pen. Yeah, pen.
That's the last part.
No, for what?
Definitely follow up.
Okay.
Yeah, I'll make sure. You have his number, eh?
Yeah.
Okay.
All of them have their contacts.
Okay. Yes, sir.
Very well.
Tough subject.
Yeah, but it's good.
It's good. It's important, at least when somebody follows, appreciates, then after that. You'll see how you
and good questions.
Yeah. I try to incorporate those areas.
Yes. Yes, and I said.
But also
I
the slides, I felt what.
Jean-Olivier tried to say, okay, we need to advertise those. No. We need to give ample time to finish.
Okay.
But let me pick something.
Ngahe? Stop. Wapichile ngai.